What is up, you guys? How's it going? I'm stoked to share something with you today. I'm Adam Verhassel. You probably already know that. And I really like investing. I think investing is a really cool way to kind of like vote with your money and also just make money. And I've been wanting to kind of talk about investing a little bit more. And lately, clean energy stocks have been going crazy. So I've been kind of like in the morning, like shopping around for clean energy stocks, and I found a couple that are promising this morning. So I'm going to show you guys why I think they're promising, and I'm actually going to invest in them right now, and also kind of take you on that process with me, show you how I reduce risk when I invest, and also just like why I chose the companies I chose. And this is not financial advice. This is just my opinion. It's purely for entertainment purposes, and you can take it and do whatever you want with it. I'm not a financial advisor. I'm not authorized to do that. And there's a big disclosure right now about why you shouldn't sue me for giving this information if I'm wrong. So here we go. Let's open up my favorite investing app, Robinhood. Literally searched for solar this morning on Robinhood, and I found two that are actually pretty interesting. So the first one is Jinko Solar, something Japanese. Or Chinese, I'm not sure. And I'm just looking at, like, if you see, they're way up right now, right? They're like way up, but, and they've kind of stabilized up high. And that looks good to me because generally they would have gone back down by now, but they haven't really dipped below this point. And generally they haven't really gone much below here, which is pretty cool. Because that probably means if you look at like other companies, often, let's see, they'll have these chunks where they go up and a little. That's not a good example. I think that they're either going to go up again or they're going to go down. Reasonable, right? Or they're going to stay there, but I don't think they're going to stay there long. I think they're either going to go up or down. And so what I can do is I can buy in here because it's pretty low, and I mean, it's low for the past few months, and I can say if it dips below this point, then I'm out. Then I made a wrong decision, and I'm only going to lose like 10%, which it's a chunk of your investment, but it's not that bad. And if it goes up, I could literally go from 20 to what, 70, 60. So I could essentially maybe triple my investment again. This one's exciting, but the next one's even more exciting. So I'm going to show you this next one. SolarWinds. It's really cheap. I like stocks that are cheaper because it feels like they can move up faster. And if you look at this, at their 5-year, I mean, they're crazy low right now. They had this huge drop. If we did some more research, we could probably figure out why they had this big drop. The other reason that I think this SolarWinds company is a good buy is if you just look at their earnings. I mean, they're consistently making money. They haven't lost money. Their earnings went down, and they were accurate about how low they thought they were going to go. But they've just been going up in quarter 2 and quarter 3, up. Quarter 4, if it's promising, if it's up, then I think this stock is going to bounce back. I think what happened is somebody sold a bunch of their shares. It dipped like crazy, and people are going to see that and capitalize on the opportunity. But you and I are already going to be in it. So we're going to ride it back up, and that's how we make our money. Really, what I'm just looking at again is the chart, and you can see that here, this is about the lowest they've been in a while, 14.18. They're up to 15.93. So again, we're buying at the bottom. And like basic rule of thumb when it comes to investing is buy low, sell high. So we're buying low, and we might be wrong, right? But we're not going to be that wrong. If we're wrong, we're going to know at $14.18 that we were wrong. So what I'm going to do is I'm going to buy, I think I want to buy 50 shares of it, and that's going to cost $797. We're going to say review, and I am buying at the market price. So what I could do instead here, which might be a little bit of a smarter decision depending on how penny pincher you want to be, you could look at the day or the week, and you could say it's actually kind of high this week. You know, it might go back down to like 14.90. Or 14.47, something like that, instead of buying all the way up at 15.90. So maybe that's what I'll do. What I'll do is I'll start by placing, maybe I'll buy 25 shares at the current price. Easy. right? And then I'll buy another 25 shares when it goes back down, if it goes back down. Maybe I'll say at $15 a share. Maybe I'll try to like let it go all the way, because who knows if it's really going to dip back down to 14.43. So I'll say like 15.35. I'll buy another 25 shares. And we need to change this from shares to a limit order. So at a maximum price or lower. So we're going to say my maximum price is 15.55. So that's 15.50. We'll say continue. And we want it to go even after hours. We want it to happen for up to 90 days. We don't want it to just end today, because it might not happen today, right? It might happen tomorrow or something. And then we'll buy another 25 shares at that price. And they're cheaper because it's less per share. So we have our limit order. We're going to say review. You are placing a good till canceled limit order of 25 shares. If executed, it will execute at 15.50 or lower, or better, they say. So we swipe up. And boom, we've got another 25 shares on the way as soon as this thing does go back down, if it goes back down. So right now I'm risking $398. Let's say the stock went completely down to nothing, I'd lose $398, which would really suck, right? Nobody wants to lose all their investment. So far I've made 47 cents. Woo! But what's really cool is now we can set up a stop loss. And I'd like to set up a stop loss for all 50 shares, but because I don't even own 25 of them yet, I can only set a stop loss for the shares that I own. So I'm going to go in here, I'm going to go trade, sell, and we definitely don't want to sell at the market price. So we're going to go shares at the top, and we're going to change this to a stop order. So you see it says if SWI falls to a fixed stop price, trigger a market sell. So it's going to sell automatically if it falls to a certain price. I got to figure out what I want this market price to be. So I'm going to go back and look at the chart, and I'm going to say, like I said, here's our consistent kind of floor, and if it falls below that floor, we're screwed. And I would consider that floor to be this lowest point right here. If you really want to, be in it for the longer haul, you could try to set your floor here. But if it goes all the way down to $12, you're losing a lot more money than if it goes down to $14 and you sell automatically at 14. So let's see, 14.18. I'm going to set mine safely below that. So maybe I'll go down to like 14.05 or 14 flat. So I'll say trade, sell, 14.04, and so I would only get $224 back. Oh, sorry, my bad, number of shares. All right, 25 shares. We're gonna sell all my shares that are available, and we're gonna make sure that that's at a stop order. So that was my bad. We gotta change it to stop order, 14.04, and then we're gonna say continue. And this is again good till canceled for 3 months, 25 shares, estimated credit 351. So review. It's always good to review it because you don't want to accidentally sell your shares for like way too low, right? You're placing a good till canceled order, 25 shares. When the price hits 14.04 or lower, your order will be converted to a market order and sold at the best available price. So it might be a little bit below what I put it at, but at least it'll sell quickly. Boom. Swipe up. Okay, cool. So estimated credit will be 351, and currently I put in 398. So if we do a little bit of math, 398 minus 351, we're looking at like $47, I think, of risk. So $47, roughly $400. It's roughly 10%. So I'm risking roughly 10% of my investment right now in order to, oops, I locked my screen. So I'm risking $40 off a $400 investment. I'm risking 10%. The most I'll lose is 10%. The most I'll lose is $40. But the most I could gain, right? That's the exciting part as we look at this. If it does climb, it looks like it took a whole year to climb back to here. And that might happen again, but the way that solar and clean energy has been moving lately, I think it could go a lot faster. So let's say it goes from where we are now, we'll be up, what, 50%, 45%. So we have the potential to make 50% at a risk of losing 10%, which equals a 1 to 5 reward ratio, risk reward ratio. We're risking, you know, we might make 5 times as much money as we're risking to lose. And of course, I had to put up more money than that just to make some money in the first place. So it's good to have some money to play with. But I hope that this was informative to you guys. I hope that this might give you a little bit more confidence when it comes to investing, knowing that you can set a stop loss, knowing that it's good to buy low, and it's okay if you lose a little bit of money by being wrong, and it's so much better to just lose a little bit of money and be wrong than to be all emotional and feel like, oh no, like I couldn't manage losing 50 bucks, like I need this to go back up. And you could do this on a much smaller scale, right? It could be like, I can't afford to lose $3. Don't act that way. Just cut your losses, lose the $3, lose your 10%, and then look for a better trade opportunity. Okay, this is it. Thanks so much for watching. I hope you enjoyed, and I will see you guys in the next video. Peace.